Perfect. So for this spring round, again, quick reminder, I wanted to combine it with the more advanced live section. So they will probably also be the exact same. And we can go over a few live trades. We can go over a few understandings of risk management as well, etc. Let's see. Let's see, what are we doing? So on the dollar, the only thing that I can see right here is that we are running into some kind of resistance right there towards the left. So the rejection that we have currently is not too crazy. It's not too big of a rejection as well. Is it that big of a rejection that we can say, can we now retrace back into this daily value gap to continue higher off that? I'm not too certain, in all honesty. And I would not necessarily want to see that. I think we can already continue higher right here as well. And especially with the weekly not having a lot of resistance right here. So the weekly most likely just going to continue higher off of here as well. Could be very interesting. Yeah, if you're just... Wait, oh yeah, he can't hear me, of course. I was about to say, but he can't hear me, of course. But yeah, if it's your first time checking, then most likely it's the settings on Discord. So yeah. Anyway, all right. So it's a breakaway gap. Yeah, exactly. Like, it wouldn't surprise me that much. As in, if the retracement happens, I would still be bullish. Would be happy to trade off of it. But I would also not be surprised if we already continue higher here. So with the indices right now, and once we're getting close to equities open as well, let's take a look. What are we doing right here? Because we have a daily value gap right there in the making, but we of course also have 4-hour value gaps. We can already look to continue lower from potentially. So yesterday was quite interesting on the indices. I recorded a little bit for the it was the 6th video, which was Flow, an extra live stream for Flow as well. Now right here on ES, Nasdaq, etc., I do believe we can already look to continue lower as well off of those 4-hour fair value gaps. So that can be quite interesting. But if we do not see a rejection during equities open and we do not get that continuation lower, then again, I would prefer the daily fair value gaps that are being created as well. For example, that one right there. So it's mainly reacting right here, mainly waiting and reacting. The 4-hour value gaps are interesting, but if we get no rejection, then I would want to wait for the daily value gaps. Then on DAX, let's see. DAX, very nice fair value area, to be honest. Fair value area right there, which we're stinging into with the fair value gap as well. It's quite interesting. Let's dive into the lower time frame. Let's get a clear understanding of what we're doing. A nice potential shift as well of order flow. We have this fair value area right there coming into it. And once we're coming into that, of course, we create also this fair value gap. That fair value gap fails to create a new fair value gap higher, does sweep this high. That is what I do like to see, to be honest. Even if we don't have a perfectly fine, clean, sharp turn right there, I do really like to see that. It's a visual order flow shift. And then right here, if we get a new fair value gap lower, that could be quite interesting right there. So I'm going to add this to the live list to keep an eye on it. You can see on the 5 minutes, very similar as well. Right there, 5 minute already had the sharp turn plus re, if we're taking that into account right there. So that technically failed right there on the 5 minute. Australian dollar, US dollar. Let's see. What are we doing? So we had the continuation lower of that fair value area right there, and the fair value gap already on Australian dollar, US dollar. And on a lot of Forex majors right here, we delivered towards lows and we delivered towards major draw liquidities right now. So, excuse me. Yeah. So right here, it's always a little bit more difficult to get involved. Ideally, I would want new daily context. Will we get new daily context? Also quite unlikely, and it will definitely take some time as well. But I don't want to chase price right here on the 4-hour time frame. I do not like that 4-hour context just in the middle of nowhere. And there's a very clear draw liquidity, like here, just before lows. 4-hour context, perfectly fine. But 4-hour context in the middle of nowhere, when we've already reached those draw liquidities, I don't necessarily like that. Same for EU. In EU, we can even see right here that we get somewhat of a rejection. So this 4-hour order block fair value area right there that we have is not very high probability in my eyes. So we could even potentially sweep into the daily value gap right there to continue lower off of that. again, I would want to wait right here. I am not too certain where we can continue lower from on the Forex majors. That's my main issue right here, where I'm quite certain we might want to continue lower, and that's definitely looking like it with the dollars will continue higher. But where can we continue lower from? I'm not 100% certain right now. Not 100% certain. New Zealand dollar, US dollar. Now this one was a little bit more clear, and it was mainly 4-hour Vegas right here. And the reason for that is because we are still very close towards the drawn liquidity right there. So this one is not too crazy. When you have a drawn liquidity very close still, then it becomes a little bit easier to understand where we want to continue lower from as well. And no sounds. Do let me know if everyone can hear me really quick before we continue. Can you hear fine? Yes. Okay. Perfect. Perfect. Okay. Okay, perfect. Then I would suggest if you don't have any sounds, well, then you also can't hear me right now, but leave really quick and then come back. Maybe that helps. Or if you do lose sound in the future as well. All right, US dollar, Canadian dollar. So surprisingly, US dollar, Canadian dollar is one pair that I really do like right here. And I have not been liking US dollar, Canadian dollar for a very long time. Almost, I would say, at the start of the year. So the whole year, I've not liked it. And right now, once we're getting closer to those highs right there, it's looking really good. And I'm not necessarily expecting retracements into daily fair value gaps right here. But 4-hour fair value gaps right there, 4-hour fair value areas, perfectly fine to continue higher off of right here. And that is looking quite interesting. Now, on the 5-minute, what do we have? We just have a 5-minute sharp term right there. Let's see if we have someone on the candle signs side. One candle rejection, huge. This was Canadian dollar CPI, by the way. That's why we're getting a huge rejection like that. So it's a little bit tricky. With CPI, either you get CPI that stings into the PD rate, we won't see higher prices off of, then gives you the entry confirmation, or it just absolutely explodes and there's no real getting in without sacrificing a lot on your stop loss. So for example, if this was your entry right there, then we could still cover the fair value gap high right there, because essentially that's a sweep, right? So the breakout traders, we want to trap those. If we don't trap those, then we'll trade back into that level. But then even then, the RR is not really looking good for the next target right there. So that's a little bit of a shame. But if we get any retracement right here into 1-hour fair value gap, for example, to then continue higher off that, could again be really interesting. I do like it. I do like it a lot right here. US dollar CHF, don't like this. Just consolidation and no real movement. A little bit of a shame, but I don't like this. US dollar JPY looks good to continue higher, but I don't want to get involved because it's an all-time high. Now, silver. Let's see, silver and gold, a little bit of consolidation, and I'm not too interested in that, to be honest. So for this session as well, unless something crazy happens and we get a real clear direction, I personally am not too interested in it right here. Bitcoin. Bitcoin, very similar, also in somewhat of a consolidation right here. No clear direction after this sweep right here. If we do want to continue higher, I would ideally want to see a new fair value gap higher, which we do not get just yet. But we also do not follow through currently off of those 4-hour fair value gaps lower. So it's quite tricky right here. It's quite tricky. And I would like to wait right here a little bit longer until we get new fair value gaps as well. All right, crude oil. So we have arrived in that weekly fair value gap right there. On a daily, beautiful daily candle rejection right there. So that in itself, right, again, 2 candle rejection, that in itself can already be an entry like that right there. Now, you can even refine your stop loss a little bit towards that low, because if we're trapping traders, we should ideally not trade back below that low right there that we are sweeping. Now, when do we go break even? Ideally, when we have next up candle, or this candle can, if it wants to be very volatile, can still be an up candle as well. When we get an up candle right there, a nice up candle close above our entry level, that is perfectly fine already to go break even right there. So if we go into the lower time frame a little bit, on the 4-hour, not looking too good right here. We have a huge expansion phase candle going against us right there. Now on the 1-hour, what we are seeing is we do have a sweep of this swing low, which I do quite like. That's a nice sweep of that swing low to potentially create a bottom to then continue higher. So on the 15 minute, even if we create 15 minutes for value gaps going higher right here, we could potentially even look for a little bit of a flow trading plan to continue higher right here. Taking into account in 48 minutes that we do create this 4-hour fair value gap going against us. So that will most likely be somewhat of resistance if we do want to continue higher right there. So take that into account as well. Now, Bank Nifty, not too interesting to me, to be honest. And still waiting right here. This could definitely be a sweep of that all-time high to then continue lower as well, but I'm still waiting, For the shorts, it's what we went over. For the longs, we definitely have a lot of interesting pairs right here, to be honest. GBP New Zealand dollar already delivered actually. Already delivered right there and was just a huge continuation higher right there. Now, how could you approach this from a candle science standpoint? With 2 candle rejection, you can of course wait for the 2 candle rejection, but the more confirmation you have, the better. As in, if we create an expansion phase candle right there towards the drawn liquidity with this singular candle right there, this in itself is already an entry. Now, let's think ahead. So right here, we don't have any resistance anymore towards the left. So that means that we right now create a potential fair value gap. And even if we create the fair value gap right there, then most likely this is going to be a breakaway gap since we don't have any resistance anymore towards the left. So this in itself can already be an entry where you don't need to cover these lows. You don't need to cover that low if you are looking to target that drawn liquidity. You can narrow down your stop loss a lot right there to squeeze out that 1 to 2 RR to capitalize on that candle science entry right there. This is one of different trading plans that we're also going to go over in the next few days and in the next few weeks as well, the last 2 weeks of the execution month. But this is one way you can capitalize on moves like this as well. You can even refine your stop loss a little bit towards below a 4-hour fair value gap, for example, where we don't want to see a retracement towards. So that is, of course, a little bit more advanced, but that is really interesting. And I would highly advise you study that because it's going to be extremely beneficial if you understand that completely. Even if you understand that on the higher time frame, of course, then you also understand the good story on the lower time frame. We're right here. The 4-hour, what do we see? Luckily, we got a retracement. Usually, I would argue that you don't really get a retracement like that before you actually get the move higher towards that drawn liquidity. So luckily, we got somewhat of a retracement. On the 5 minute, right here, what do we see? Beautiful sharp turn, beautiful right there as well. So when would we go break even? Right here. That was the entry. Right there. Recover those bodies right there, arguably. And this line right here would still be important for me as well, right there. So when would we go break even? Well, this is one of those scenarios where if there's no fair value below us, we can go break even extremely fast. So let's look at this. Right here, we have this fair value gap after we have this fair value gap right there as well. So can we retrace into this fair value gap? Yes, potentially, but that's quite a deep retracement we make before we actually continue higher. Because right here, if we look at this down candle actually stings into this breaker already that we have right there. So here, if we already want to continue higher, then a retracement into this fair value gap is not that likely, in all honesty. So here, if we want to go break even, then going break even can be done already when we have a new fair value gap higher right there, or even the expansion phase candle higher right there. It's already enough for me to go break even. Again, I would rather early on, if you're just starting out with a trading plan, my focus would rather be on going break even a little bit too early rather than too late. I would rather just preserve some capital than lose some unnecessarily, and essentially what we could have, how do you say that? A loss that could have been prevented, let's put it that way. And then over time, you can potentially be a bit more loose with your break even as well, if the data allows it. But I would advise, if you're just starting out, be more strict with your break even. And especially when we're that close as well towards the take profit and we do not hit that initially and then we retrace a little bit, I would not want to see retracement all the way towards my break even and just simply hoping for it to still continue higher right there. And when there's a form of hoping, then usually that's also a good sign. Go break even. I took this trade today. Beautiful, beautiful, beautiful. I had hoped. I secretly hoped someone took the trade as well. All right, let's see. GBP upside dollar. Let's actually really quick, because to go over this as well. This right here, if we do create a daily fair value gap right now, overlapping with that high again, that's really interesting context to then continue higher off of that again, right? So do not force trades right here anymore. We run into this last resistance right there. That's why we actually saw the retracement in the first place. So if we now want to continue higher, let's actually pinpoint a little bit more accurate. What are we looking at on the daily? We have this area we want to trade back into, that fair value gap right there that we can reach. So if we get a daily fair value gap higher right there, could be very interesting to look to continue higher as well. But do not chase it anymore. If you did not catch the move, then I'm sorry to say, but you most likely already missed the move as well. So either get in early or don't get in. All right, GBP Australian dollar. Now this right here is also really interesting and a very clear drawn liquidity in my eyes. And it would be a big surprise to me if we do not actually deliver there. But who knows? We might not. We might not. So what do we see? We have on the weekly a swing low right there. Now on the weekly, this is absolutely beautiful because we don't necessarily have a clear discount rate we can continue higher from. The only thing we have is a swing low. And when the only thing you have right there is a swing low we can potentially continue higher from, mark out that swing low. When you have legs continuing higher and there's no fair value gap in it, so that also then takes away all the order blocks, mitigation blocks, breaker blocks, there's nothing there. So only a swing low. Then mark out those swing lows and you'll oftentimes see how right you are by marking that swing low and how we can sweep that to then continue higher. Right here, all we want to do is, again, focus on the 2 candle rejection right here. 2 candle rejection is showing the signs that we do want to sweep that low instead. So right here, what do we want to do? On the daily, this in itself, a little bit early right there, we do not actually respect that. That's why we see the previous week low sweep right there to then continue higher off of that. We get a bullish daily value gap, which I would unnecessarily want to see retracement into right here. So even here, what can be an entry just purely based on daily, not necessarily going into the lower time frame. On expansion phase candle right there, whilst we were not expecting a retracement into that daily fair value gap, is of course a perfect sign right here after taking out basically all the resistance as well. So this can run quite fast. Then what can we do? Entry right there at the close of that candle, cover the candle low. We're definitely not expecting a retracement into that. Worst case scenario, we expect a retracement into this order block right there. Absolute worst case scenario. Fair value gap even is also holding us, holding that back from trading into the order block. So there's quite a lot going for us right here, targeting that 1 to 2 right there. Now, of course, this is if you want to look at the daily, even in the first place. But trades like this, if you are quite busy in your day-to-day life as well, and you're looking to mainly scalp sort of the daily time frame right here and catch sort of like a one-shot, one kill, I would argue, where it's mainly one trade throughout the week and it's a really high probability trade. These trades are definitely something you would want to consider looking at. And even if you do not want to do that, then you have the 4-hour time frame right there. And you can go into the 4-hour time frame to look at these 4-hour value gaps to potentially continue higher off of that. So look at the lower time frame. Do we have something interesting? We get a sharp turn right there, which actually fills. It's not the best sign. We get another sharp turn, which actually fills as well. That would worry me a little bit, to be honest, at that moment in time. So I would definitely require a little bit more confirmation than just the sting into any fair value gap right there. Now, after we do start to continue higher right there, is that it's a sting into a 50-minute fair value gap that we have right there, and a new 50-minute fair value gap to continue higher off that. Perfect. That is looking quite interesting as well. And even on the 1-hour candle rejection right there, higher is also very interesting. Now, again, if you're going down time frames for candle rejection entries, I would advise enter on the second candle, ideally. First candle is always a little bit tricky. Second candle, enter on that because you're going to low time. So ideally require more confirmation as well. Then eventually we just continue higher as well quite nicely. And this can definitely look to run as well higher. Very, very interesting. All right. US Canadian, like we mentioned, right? Also really interesting right here to continue higher. Really interesting. And once we're getting into the more advanced stage, you'll see this often, quite often, or you'll see this come back over and over and over and over. And if you know how to capitalize on this, this can be so extremely strong. This can be even stronger, in my opinion, than going into the 1 minute time frame to look for 1 minute scalps. And well, if you know how to use it on a 1 minute, it can also be very strong. But knowing how to do this on a daily time frame is so extremely strong, where even a trade like this right here is completely valid right there. If we don't have any resistance anymore, we are not sweeping this high anymore. We are running that high. Right now, we don't have any resistance anymore. So we can run towards that high quite easily with Canadian dollar CPI coming up tomorrow, with US dollar news, enough US dollar news throughout the week as well. Then pinpointing your stop loss right here towards a place where we do not expect a retracement to then target a 1 to 2 right there. That is perfectly fine, doable right here as well. So I would advise, even for your bias, this really helps, because when you understand an entry like this, you also understand on the higher time frame where we most likely don't have a reason to retrace towards before we actually continue higher, which of course helps and benefits you in understanding which fair value gaps right here you would want to actually go ahead and use. So that is very beneficial, very, very beneficial. Now, Canadian dollar, JPY, these right here, not too interesting to me just yet, and we came very close to drawn liquidity, which then if we don't follow through, that worries me a little bit, in all honesty. Now, we did see a sweep of that low again, and then we continue higher after that, but we failed to create a fair value gap higher on the 4 hour time frame. And we also have a huge expansion phase candle going lower right now on the 1 hour. So it's not that interesting to me anymore. GBJPY, on the other hand, again, very, very interesting right here. And this right here, we also mentioned in the previous forecast, that low. And why that low is the only discount rate really that we could have right there where we can still continue higher from. So we don't have the fair value area anymore, really. It's not really a boundary anymore. Yes, we have fair value gaps, but I also always like to use either the odd or the flaw right there for value gap. These fair value gaps are more so random fair value gaps to me. Don't really want to look to trade off of those. But right here, we can use that discount rate right there in the form of that swing low. So even, again, if we now have those two candle rejection higher, then even these entries are perfectly fine to take to target higher if the 1 to 2 is still doable. Now here becomes a lot more tricky. So how would I approach this? Well, if we now create a 4 hour value gap to continue higher off of that again, I would prefer to look at that 4 hour value gap instead of entering straight away right there. But if I was a little bit earlier right there and in the morning, and this right here is a perfectly fine entry that I would be more than willing to take right there as well. And 1 to 2 is not even at the high, it's already right there. Right there. Perfect fine. And this right here is also a trade where I would currently be break even. After that next expansion phase candle right there would be break even. That fair value gap is now indeed a breakaway gap as well. So I would not even want to see a retracement into it. And if we do get a retracement into it, then most likely it's quite low probability and it might not even hold in the first place. So perfect trade, perfect trade opportunity right there. Now, of course, I took a few of these trades as well for my testing, and it's looking very good, very interesting so far, very interesting. Now, let's see. Let's look at a few questions as well. Let's see. We have a daily breakaway gap on Bitcoin. Do you think we can get to it to continue lower? Yeah, it's tricky. And the reason it's quite tricky is because if we get this retracement right there on the daily, then I would not say, well, let's look at this. All right, I'm waiting for a sweep, a potential sweep right there of these lows, this weekly swing low. I would not be surprised if we do continue lower a little bit into this monthly fair value gap as well. So it would not really surprise me. But if we do already right now deliver into this daily breakaway gap right there, then this becomes quite a nice sweep of liquidity. So we're trading against the sweep where I would not expect a move lower off that fair value gap anymore. I would essentially be more convinced of higher prices at that moment in time because I'm not expecting a retracement all the way towards that fair value gap, if that makes sense. So I would personally not really use it. Let's see. I have a question about risk management from the last spring round video. You discuss creating boundaries from switching between 0 to 5% and 1% risk to limit drawdown and secure profits. You calculated size from the initial 10k balance. When would you think about raising the size of position? Yeah, that really depends, and depends on quite a few factors. So let's say in the funded guide, we have two options. We have the really conservative option, so very careful, etc. And we also have the very aggressive option. Let's say you've already paused funded accounts previously, and you are quite confident in pausing a funded account. It's not your biggest concern, and it's actually quite a waste of time not pausing that funded account quite fast. In that scenario, I would advise go look at 2% risk and then drop to 1% risk potentially. So then it's 1% and 2% instead of 0 to 5% and 1%. If you're just starting out, you're just starting to use the trading plan, then I would advise squeeze the most out of that challenge you possibly can. So most likely, if you're just starting out, there's a very high probability you're going to fail that challenge. Now, it's not a problem because you need to learn from that, and everyone needs to learn from that. Everyone needs to go through that learning cycle. But if you're doing it very fast, then most likely you need again money to pay for a new challenge and again. So squeeze the most out of that one challenge. And that is when I would advise, okay, 0 to 5% and 1%, even potentially 0 to 25% and 0 to 5%. And now when we start upping our risk, I would advise if you're on a live account and we're not talking about funded challenges, then I would advise, okay, you can look at 2% risk when you reach the 10% boundary. With 10% boundary, I mean when we have a 10k balance and we reach 11k, we can potentially look at 2% risk right there, and then drop heavily in risk as well if we reach drawdown again. That's personally how I go about it in a live account, so not funded. Funded live account, no. I would just stick to 1% risk, just milk those payouts. But a live account, as in personal account, for example, 2% risk after 10% boundary, that's doable. That's doable. Let's see. Yeah, really good displacement. I like that as well. I see that as well right now on GU and EU as well, where this is a beautiful sweep of that low right there. And I hope everyone can see as well how those lows are getting created, right? It's very funny because this low would have not gotten swept if this candle was an up candle. So right here, we're coming off this weekly order block right there. And the reason we still sweep that previous day low is, of course, because this is a low close right there. So it all adds onto each other. And here on the daily, we get a 2 candle rejection, but this candle right here is not an up candle. It's not a huge rejection higher, where we did see we came quite high right there, but not high enough to actually not sweep that low. So here, when we leave a formation like this is a beautiful fake bottom right there. When we leave a formation like that and we get a down candle in this scenario right there, second one a down candle, we can be quite confident about this draw liquidity right there. We can also be quite confident that might be a sweep right there to then continue higher instead a little bit. So yes, I do see that as well right here. That's beautiful. Very similar to crude oil right here on the 1 hour. Very similar. When you have a formation like this, if this is not an up candle right there, after this formation, then this is exactly what you want to look at for a fake bottom right there. Quite confident that we're going to deliver towards that, and quite confident that we might actually want to sweep that to continue higher instead. So add this as well to the live list actually, to keep an eye on it. Ideally a 15-minute fair value right there to trade off of. Let's see. I think high price on oil is very realistic, especially with the war going on in the Middle East. Yeah, very true. Very true. And tomorrow as well. I think whenever we have a retracement like this during non-really volatile times. So what I mean by that is this is a London session. Crude oil for London, yes, sometimes it's volatile, but overall equities open from around, well, currently actually until 2 p.m. New York local time. That's the most volatile time. And during the most volatile time, that's most of the time when you get the real moves. So it always worries me a little bit less when we have a retracement like that during non-volatile times. Tomorrow we have news coming in as well, crude oil inventories, which could be interesting. Could be quite interesting. Now right here, ideally of course, we have to monitor this fair value gap right there. Because if we want to continue lower, we will continue lower off of that 4 hour value gap. Perfect, Leo. Perfect, perfect. Let's see. I enter in gold, 4 hour value gap, and 50-minute ST plus 3. Is that right entry? Let's see. All right. What are we doing? So we have a 4 hour value gap right there. We have a 50-minute ST plus re. There's a few things I don't like personally. It is a mechanically, it is a good 50-minute ST plus re, yes. But there is a few things I don't like if we're being picky about this price action, and I'll go over it right here. Let's see. On the 4 hour, we are looking at this 4 hour fair value gap right there. And if we look at the 4 hour fair value gap, we have this 50-minute ST. The ST is beautiful. The ST is absolutely beautiful. Now, after we get the ST though, if we look at candle signs, etc., then if we pay attention to more detail, we see right here, ideally it should have created a new re already continuing higher right here, which it did not do. And right here, it started to reject for no real reason, because we already took out the 2 candle rejection as well. So we get a huge retracement right there, which is a little bit suspicious to me. And after, when we start to run these highs, or well, the idea is to run those highs, we do not actually run those highs, and we more so sweep those highs right there, where we get a huge retracement coming back into this fair value gap right there. So entry wise right here, mechanically wise, again, it's perfectly fine. The only thing I do not like is really the way the entry formed right there. So that does worry me a little bit right there. And that would, for me personally, I would require a little bit more confirmation instead of the 50-minute ST plus re. I would want to see a little bit more confirmation, potentially in the 1 hour fair value gap higher right there, or even that fair value area right there failing to follow through lower, to then look at higher prices. But other than that, it is perfectly fine as well. If we are talking about stop loss as well, I would cover this low instead of all the way this low right here. I would cover this low, because as you can see, this low right here, the 1 to 2 is almost already achieved, and we can actually be break even at this moment in time, where if we target a lot higher right there, it becomes a lot more difficult right here to go break even. Although arguably right here, I would also go break even currently, even if the target is, even if the entry is right here, and we target higher, I would also go break even already right there. And the reason for that is because if we do create a retracement right here, even with the price action already going on, it's just not really good price action right there. Then if we do create this retracement, I do not think we want to actually sweep that to continue higher. We might want to continue lower instead. That's my thought process. Let's see, on GBP New Zealand dollar, wouldn't you want to wait for the 1 hour bearish value gap to be mitigated to get involved? So ugly price action after mitigation. Let's see. GBP New Zealand dollar. 4 hour, I imagine, right? Right there. 1 hour right there. Yeah, that's a good one. That's a good one. Definitely. I went over it quite fast right there, but definitely, yeah. When looking at candle rejection, not necessarily important for me. But if we're looking at a 5 minute right there, yes, it's a good one. It's a good one right there. Although, I do want to say right here that, well, I would not necessarily wait for it. And the reason for that is because we already get a 5 minute ST plus read before we actually reach the 1 hour value gap right there. So for me, this right here, I would just go break even already. And just the fact that if we do get somewhat of a resistance right there and we continue very low, very deep right there, we're fine on break even. But if the 1 hour value gap was, for example, right here, before we got the 1 minute or the 5 minute ST plus read, and the 5 minute ST plus read at the exact moment that we reach into that 1 hour resistance, then right here, this is exactly where I would want to wait, and my entry would actually be later in the form of that, for example. Let's see, if we're entering on the higher time frame candle signs entry, then it might take a day or two to reach the target, but many profits doesn't allow overnight positions. If we're wrong, how should we approach this? Yeah, so personally what I do is, I do find prop firms as well. So the way I approach is I have a few options. Of course, I have investors capital, but if I'm looking to test something, I like to test as well on prop firms. And I look for the prop firms that do allow overnight holding. Now, there are quite a lot of prop firms actually. You have Funded Next, FTMO as well. So the steady, bigger ones, they allow overnight holding. You can even go with a swing trading account on FTMO. So you don't have to worry about, even if you reach the live account, you don't have to worry about new trading. You don't have to worry about overnight holding. You can even weekend hold if you want. And that's personally how I would want to approach it. So mainly, there's a few, but mainly the one I can think of is FTMO as well. I'm in a GA trade, but it looks like I may become liquidity. See, it's looking good so far. It's looking good. It's looking good. No worries. Right in GBP Australian dollar at the moment. Perfect, perfect. Yeah, it's really good. Really good. And these were really high probability. So I'm happy to see that some people as well got involved, because these pairs right here were, yeah. It's just draw liquidity quite clear. Just capitalize, capitalize, capitalize. Just click buy, whatever you do. Click buy. What makes you like GBP Australian dollar when it has been in a daily high time consolidation? Wouldn't you just want to look at GBP New Zealand dollar, if anything, because it even has weekly context? Wouldn't that be a higher probability? Well, not necessarily, because this also has weekly context right here. And yes, this has been in consolidation right there, but the weeks before, etc., we didn't necessarily have a lot of volatility for the GBP. And GBP throughout this week, that's why I wanted to look at a lot of GBP pairs. We have a lot of volatility coming in at GBP right here. So if we do want to continue higher, coming off of this resistance right there, perfect. And the only area we can continue higher is sweeping that low to then continue higher off of that. Now, the reason why this is still high probability, and I would agree with you as well, GBP New Zealand dollar right here is definitely a little bit higher probability right there. When volatility kicks in right there, it's just a very clear drawn liquidity. This is a very easy delivery. Where here, this delivery is still a little bit far out, right? So there's a lot more highs we need to come over essentially, and to continue higher. But right here, I would argue that once we get that sweep and we get the volatility throughout a week where we really have a lot of volatility, then there really is only one option to continue higher right there, which is, that's what I really like. Weekly VIGAP failed to continue lower right there. So there's no real arguments to continue lower, sweep of the lows of the consolidation to then continue and run the highs of the consolidation. That is looking really nice in my opinion, looking really nice. And it's mainly the fact that we had a lot of volatility throughout this week. So I'm confident enough to say that we will not consolidate because we have a lot of volatility in this week. So if it sweeps that low, the right moment with the volatility, perfect. We can continue higher. Let's see. I'm completely new to trading. Would you recommend that I stick to just one pair or multiple pairs as we do here? If one, should I start with Forex to learn until I feel confident to switch to something else? Nice to finally virtually meet you. Likewise, my friend. And if you're completely new to trading, I can understand it can be very overwhelming. And my advice would actually be pick one of the Forex majors right here. Stick to that on the higher time frame, lower time frame, whatever you want to do, just to get familiar with price action. And I would not necessarily advise if you already have some knowledge on trading, but the way I see your next step is going to be, okay, if I understand EU, then I already have a good understanding as well of a GU right there and AU potentially as well. So I can see the correlation. Then you can see the correlation with eventually the dollar right there. And then we can slowly build onto that understanding with the indices, with metals, with others, with the crosses right there. So we can build onto just that singular understanding of one pair. So I would advise stick to one of the Forex majors right there. And then once you feel like you're limiting yourself, it's time to take the next step. Where you feel like, all right, this is I have a pretty good understanding of where it's going to go. I want something more. Perfect. We can move on. So keep us updated on that as well. Keep us updated. Let's see. However, in crude oil, let's say if the price prevents the creation on the bearish 4 hour VWAP, I don't think that will be the case. But with that 2 candle rejection on daily, it will be fine. This can be a bound to take a long-term entry, 100%. Yes, for sure. The only thing right here, and this is very interesting as well, if you look at trade this 2 candle rejection, so right here, if we break this down, if we now want to continue lower still, there's really only one option we can continue lower from, and that's this previous day high. So oftentimes, if we do not actually continue higher of 2 candle rejection, we will see a sweep of the previous candle high right there to then actually continue lower. So if you want an extra boundary, you can wait for a close above that, for example. Now, if we wait for another boundary right here, then the 4-hour value gap right there, yes, that's most likely going to be created. And once we trade back into that, seeing the 2 candle rejection right there fill essentially, and there right there can also be again a long-term entry as well for crude oil to continue higher. So that can be very interesting. The only thing that will worry me right here is that we do have a 4-hour value gap currently going against us. So that's the only thing that worries me right here. So that is definitely something I would want to wait for right there. I want to go about a long-term position right here. Many EVL challenges have 2-3% limit. How can we set a boundary in this case? Yeah, if there's a 2-3% loss limit, then that's quite a crazy limit, to be honest. But mainly that's I imagine that could be futures, maybe. But for Forex CFDs, I've personally not seen that. I've personally not seen that thus far. 8 to 12 is indeed, well, is the industry standard. So if that is the case, I would also advise go with another firm. If it's futures, then just set the different boundaries. So for example, if that is a 2 to 3% loss limit is crazy though. That's a very small margin. But if that is the case, then again divide that. So where, for example, 5% boundary is mainly based off of you still have 5% to go after that as well. Where if this is the case, you have 3%, then let's do it at 1.5. But I would not even initially risk 1% if we only can lose 3% of the account as well. So then it would be mainly 0 to 5%, dropping to 0 to 25% at 1.5% drawdown. That makes sense. So taking half of that. Let's see. Took a trade on Australian dollar, Canadian dollar, closed manually as it was consolidating, entered on a 5-minute ST plus re at the 4-hour value gap. Let's see. Australian dollar, Canadian dollar. And it was at the 4-hour value gap. This one. The overall context is quite interesting. Right there, I do quite like it. Where we do not respect the fair value area anymore. Can potentially continue lower right there. It's not too bad, not too bad. I do like that. On the 4-hour right here, can potentially continue lower as well. On a 5 minutes right here, that's interesting. It's good. It's good right there. And it's a good closure as well, especially ahead of CPI right there for Canadian dollar. So we're never 100% certain on what I can do, of course. And with that being consolidation, then yes, this is really good. Really good. I like that. I like that. Really good. We've been doing really well, to be honest. Every time I notice AG as a suggestion in the live session, it's been a really good one. Really good one. I like that. Let's see. The retracement happened because we came into a 4-hour order block on gold. Uh-huh. Will be interesting to see what we do right here, to be honest. Big consolidation right now. Interesting. 1 hour still far away, so an entry still valid to target it. For sure, 100%. 100%. 100%. Will be interesting to see. And I really like, as well, if I'm looking at pairs, I like pairs that have somewhat of a retracement. So for example, we can compare this to crude oil. Here, GBP Australian dollar has a huge move higher right there. So we're not too sure if it's just one move higher to then continue lower again, or if it's a move higher to again continue higher. So that's where a retracement comes in. A retracement like this and then a continuation higher, to me, is a very sustainable run. That's very healthy price action if we do want to continue higher actually. So all these retracement into discount rates, that's really good. That shows a healthy sign of price action that actually wants to continue higher. Or if we compare that to crude oil, for example, right here, and we also look at the same, then let's look at the 1 hour actually to get a more clear idea. Then right here, this run higher is just one singular leg higher almost. So that's quite a unhealthy move higher. As in, if we still want to continue lower, then we can still perfectly fine continue lower right there. So we do not know if the retracement that we are going to make right now is to actually continue lower, or if it is going to be retracement. Of course, we have an understanding of the weekly fair value gap right there. We might want to actually continue higher instead because the higher time frame premise. But it gives me a lot more confidence to know that the retracements that we have right there are not actually there to continue lower. They are just indeed for retracement purposes. So when we now have a push higher, that is a very healthy, sustainable run to actually look to continue higher as well towards new highs, and very long term towards these highs right there. And even longer term towards those highs right there at 95. So it could be very interesting. Could be very interesting. And again, if you're looking to take a long-term position right here, which is very doable, then I would always require a little bit more confirmation. Short-term position is perfectly fine to take an entry like this. But if I'm looking to have a long-term position, and I'm looking to actually target a little bit more RR as well, so for example, something like this, then I would definitely want more confirmation. So the more confirmation here for me would be this 4-hour value gap would need to be gone, would need to be disrespected for me to take a long-term position, to actually be confident to hold that for a very long term. Going break even is going to our entry point, or can we go to protect high/low? Yeah, personally, I would never go above my break even point, so going towards our entry point. So if we're talking about bullish price action, for example, GPR staying dollar, I personally, from my experience, I'm not really good at it. I can also say it like that. So right here, if I enter, for example, like that, I personally always trade just break even right there to my entry point. I never really go towards higher levels, so I don't trail my stop loss right there in profit. I don't like to do that personally. But if we're talking about a protected low, which is still underneath our entry, that's also perfectly fine. I usually do that when I'm not too certain anymore about price action, and I'm just a little bit suspicious on what is happening on price action right there. But keep in mind that the higher time frame premise is always a little bit more important than the lower time frame premise. So oftentimes you'll still see a sweep. Just make sure that it's not actually a missed winner. So also quite important. Will funded friends allow overnight trading holding? I would have to ask my partner if I can actually say that. He's in the live stream, so Lucas, can we actually already mention that, or do we want to keep it a secret? Yes, we can mention it. Okay. Yes, we will have for funded friends. So we will have a normal account, and we will also have a swing account. So we will allow overnight trading as well, overnight holding, even weekend holding as well as on the swing account, news trading as well. Let's see. Okay, take a look at this trade on GA. Wow, that is very unfortunate. Let me see. Where is that? Is that on? Let me try to pinpoint trade right there. Is this one right there, I believe, right? This one. Let's see where your entry was. Your entry was around there. And stop loss was right there. And that's where we can continue higher from. Overall, the ID, the drawn liquidity is good, but I think the entry right here can be a little bit better. Maybe not necessarily the entry, the stop loss placement. And what I mean by that, because if we do want to retrace right here, then even on the 15 minute, what is the fair value area at this moment in time? The fair value area is this area right there. So if we want to create a bigger retracement and not just have that retracement, then we will likely create a bigger retracement like that into the fair value area to then again continue higher. Is this very unfortunate? Yes. But I would require a little bit more confirmation or a little bit more context right here. That's what I'm missing. A little bit more context right here. So the 15 minute is, it's not necessarily the best option, I would argue. I would rather look at it the 1 hour even. And you don't necessarily need to wait for an exact pinpoint location that we can trade back into. But if we have a down candle like that, and then we create a new up candle, even that could have been a new entry right there to then cover this new fair value area that we have created right there to then continue higher off of that. So that would be my advice. It feels like one of those trades, and you can correct me if I'm wrong, but from personal experience, whenever I've missed the first trade right there, I try to still get in on the next trade right there, but the next trade is always a little bit lower probability, and the next trade is not necessarily the best trade. That's why I usually mention at the beginning of the live stream as well, I mentioned that actually, which is either you get in early or you don't get in at all. And usually because when we are already leaving the station where we already had the perfect entry, etc., then usually the next entry is quite low probability, and it's never really a good entry because we're always trying to rush to get in, if that makes sense. That's what this trade feels like a little bit to me. You can of course know that better than me, but yeah, that's the feeling I get from it, if that makes sense. I would like to apply for a job at Fun Friends when available. The idea of working with a business that I want to pursue a career in would be great. For sure, for sure. For job application, etc., you can mainly reach out to Bullish Lucas in the Discord right here as well. Feel free to send him a message. For the sell off on GBP JPY. Let's see. Ooh, okay, okay. All right. Still, actually, okay. It's quite funny that I mentioned that right there because this fair value gap right there, and when we look at this entry again, I mentioned right there, I would personally be break even right there at that moment in time. This is a retracement that I personally did not necessarily expect. Let's see if we still want to continue higher off that 4 hour value gap. Worries me a little bit though, because now we are potentially sweeping this high instead of actually running it. And after this move right there higher and retracement to then create a new value gap, I would not necessarily want to see a big retracement like that. So that definitely worries me overall. Quite interesting. Quite interesting. What happened? Was there GBP news or? Interesting. Interesting. Very interesting. Is the funding guide based on 8% drawdown account or 10% drawdown account? Mainly 10%. I mainly use 10%. Mainly just the average 10% mainly. But for 8%, it also works perfectly fine. Because for funded guide drawdown, then you also you drop down at 4% actually. It's a little bit more conservative, I would argue. Indices seem to be decoupled of dollar more often than not. They seem to be on their own league doing their own thing. Yeah, very true. And if you're looking to trade indices, again, I would not necessarily worry about the dollar a lot. They are strong enough to do their own thing. Same for the metals right here. So silver and gold, if you try to perfectly match them with the dollar all the time, yeah, it's not going to be great. And the main reason for that is because they're just strong enough to do their own thing, oftentimes. And where the Forex majors, of course, they are really reliant on the dollar. So you can match them very closely. Let's see. But I do like the idea though, Monk. It was a very good idea. It was a very good idea. I like it. It was a good idea. Very good idea. I think it's a great learning experience as well, because when you take that loss right there, then potentially next time you can see, okay, how can we get involved in a little bit of a better method, potentially. This is what I meant right here. When we create a one candle rejection right there, and the second candle is a down candle like that, it's usually the case that we trade towards that low right there. And then potentially sweep that low to continue higher off of that. But that low is quite a clear strong liquidity in my eyes. Good morning, Bradley. Good morning. Good morning. How are you doing? Would you wait for an hourly FEG here on DAX? Or, I forgot to look at DAX actually. What are we doing? It already delivered. This is draw liquidity right there. Choice for, that's a bit of a shame. I would have loved to look at it right here. But anyway, it did play out to continue lower. Now right here, I would indeed wait for a 1 hour value gap. Yes. Yes, for sure. 15 minutes is a little bit too tricky since let's say the original context right here is 4 hour. So we're coming off a 4 hour context. Then dropping into the 1 hour, perfectly fine. And dropping into 15-minute is perfectly fine before we take out this low right there. But once we take out the low, I would not necessarily want to go into the 15-minute just yet. I would want to wait for 1 hour, and then in between that 1 hour, again go into the 15-minute, if that makes sense. Let's see. Do you speak about kill zones later on in the course? I want to stick to the London kill zone and have a more strict plan. Yes, we go over it in the recent spring enrollment videos as well. Which one was it? Flow, I believe. Flow, yeah, I believe Flow. And with the different training plans coming up, we'll discuss it as well, for sure. Sorry, only joined there, no worries. Could you go over what you were saying about not trading third candles in candle science trading plan? Do you mean when I went over this scenario right here? Or no, wait, not this scenario. Which one was it? Gold. This one right here. That one. So whenever we have a rejection right there and the second candle is supposed to be an up candle right there, it's not an up candle. In this case, I would not want to trade that. I would not want to trade that right there. And usually the case is that we will actually, if we do want to continue higher, we will sweep that low to then continue higher. But it's quite a guarantee almost. Don't want to put a full guarantee on it, but it's quite high probability that we will trade back towards that low first before we do anything. If that makes sense. And we went over that in, let's see, GBPJPY as well. Also a good example right here, a little bit earlier, when you create a down candle like that, and the next candle, or even before that, is also down candle, not creating up candle right there. That's suspicious. And usually we sweep the low to then continue higher instead, if that makes sense. Is there any mechanical rule for waiting for more confirmation? The mechanical rule is quite subjective. And then there's a mechanical rule, as in, if I see anything I don't like, then I wait for more confirmation. But that is, of course, quite subjective. What is something I don't like? So I always say, if it does not fit in a utopia, then most likely you want to wait for more confirmation. So, for example, right here, whenever we sweep a high coming into a new discount rate, I would want more confirmation. That's a mechanical one. But when we do have just a normal fair value gap right there, when would I want more confirmation? If the lower time frame does not give me a perfect ST plus B. So candle science or flow is not perfect to continue higher off of that. Then I would also require more confirmation instead. Higher end everyone is possible. You can check for sure. US 100. Let's see. Yeah, so personally right here, I am still waiting. The only thing I can really see is potentially a sweep of that low right there. When did we sweep that actually? Earlier throughout this day. But personally, I can see this sweep of that low. This retracement right now with equities open as well, stinging into that sharp turn to then continue higher off of here. Targeting these highs, targeting this 4-hour value gap. It's very short term, what I can see. Is it extremely high probability? I would argue not really, because overall I'm bearish. I'm still bearish on Nasdaq right here longer term and for the coming next days as well. So I want to wait what we do with that 4-hour value gap right there to ideally trade off of it, not towards it. So let's see on the lower time frame, what are we doing? See if we can create 5 minutes for value gaps, 1 minute for value gaps. With a sharp turn right there that we actually sting into right here as well. We interesting to see. The delivery higher right there will be quite interesting. But remember, for me, the higher probability move is always alongside the higher time trend. So what I mean by that is right here, when we actually want to continue lower. Instead of trading towards those PD rates, trading off of PD rates, it's always higher probability. Let's keep an eye on it. You can keep an eye on it. Is this sort of a hybrid trading plan? I want to trade London majors during London morning for me, and then in the afternoon, if I haven't got any trade, look at indices. Yeah, for sure. For sure. Do keep in mind that you're going from a filtering process trading plan to a flow trading plan as well. So that might be, it's sort of a hybrid trading plan, yes, but you start off a filtering process and then you go to a flow trading plan. If you're just starting out, it might be a little bit confusing. So if you do notice, of course, you can go ahead and do it. I do like it. If you do notice it's going to be confusing, then take a step back and choose one of the two, I would argue. I know it was a long time ago, but on the 6th of March on silver, we had a daily value gap. We also had a bearish 4 hour value gap. Would it be valid to target the 4 hour value gap with a 50-minute re? Would it be a break even with 1 to 2, right? Let's see. Let's see. On the 6th of March. This one, right there. We have the daily value gap, and we can go into the 4 hour. And we had this 4 hour value gap right there. And then a 50-minute re, you mentioned. Right there. Yeah, so this is a good example right here of actually what we went over a little bit earlier as well. So here we have this re right there, starting at low. And 1 to 2, that's perfectly fine. But I would also be break even right there, because if we do want to continue lower, then that 4 hour value gap right there. So this most likely would have been a break even for myself. Now afterwards, we do want to continue higher again, then a run of this low of this high into the 4 hour value gap, because that also shows again 2 candle rejection, etc. is, where is it? Is failing right there. And then we can actually look at a new value gap to continue higher off of that as well. Right there. So that value gap is very interesting actually to look to continue higher. If that makes sense. But yeah, would have been valid for me. It would have been a break even though for me as well. And potentially the re-entry later on. But that's never a guarantee, of course. Could you go over a UPA from yesterday in relation to candle signs entry? Would like to see your thought process for sure. It was really nice, and so behind the whole thought process right here, the main thing was that we had this 4 hour value area and 4 hour value gap we could still continue lower from, and I really liked AU over the rest because it still had a very clear drawn liquidity, which it was very close to as well. So no resistance. So the daily fair value gaps are most likely going to be breakaway gaps as well. So here on the 4 hour, we can already look to continue lower right there. Now, when we dive into the fair value area right there, the 2 candle rejection starts at this up candle. This up candle right there. First candle is not a rejection. Okay, perfectly fine. First candle is not a rejection just yet. Second candle is a rejection right there after sweeping the previous candle high. Could we argue that we want a little bit more confirmation after that candle? I could see it. I could see why someone would want a little bit more confirmation after this candle and enter on that next candle. But let's say we did enter on this candle right here. Then at this moment in time, because I believe, and I'm not sure, I believe I missed that in the video. I'm not too certain, but in real time, of course, in hindsight, we could argue, well, we wouldn't go break even just yet. But in real time, whilst this candle was forming actually, we can see that this candle was all the way at the bottom, right there. Right there. So this right here, whilst this body is all the way at the bottom right there, for me, would have likely also been a break even. Because right there, then I would go break even. Since it's already continuing lower, there's no real reason to retrace. Where this sweep right here of these lows, that would worry me. I would not like that. So right here, that exactly would also be a break even at that moment in time, where I would get a sting out at break even to then a continuation lower instead. Now after that, of course, when we talk about a re-entry, we can still look to create a re-entry right there when we are confident, okay, it does actually want to continue lower, cover the same high right there, to then actually look to continue lower and target the 1 to 2 again. But an initial entry would have most likely also been a break even to me, because right there, because of that wick lower right there. It's already continuation lower, so it would have worried me. Let's see. So actually really quick look at the live things we mentioned right here as well. Crude oil, let's see. Yeah, tricky situation right here on crude oil. For me, the plan of action would be to see what we want to do with that 4 hour value gap. If we do want to trade back into it, that's already a good sign actually, because right here, this is already quite a long wick at the top. So if you want to trade back into it, it's already a good sign that we might actually want to continue higher instead. In the meantime, I would want to wait a little bit right here on crude oil. Quite tricky. All right, on DAX, what are we doing? Quite a sweep right there, a potential sweep right there of the lows. So it's one to wait as well. Nasdaq. What do we have? 5 minutes of values created right there. Although that again is a long wick at the bottom. A long wick at the bottom. That's not necessarily something I like regarding flow trading plan right now. Let's see. If we have swept 2 times same low or high and the price moves against the sweep, is that an indication that we are disrespecting liquidity and we can get involved on low, high, or sweep is very clear or no read. So in this scenario, let's see. In this scenario where we have one sweep right there after the up candle, I would already want to see a higher price ideally. If you get another sweep, then to me it shows more so consolidating price action than an opportunity to get involved. And what I can see is we have that for value gap. We failed to follow through right there. We get that sweep, that fake bottom right there. And that up candle does not follow through with a new up candle towards the right as well. So when that happens, I would ideally just want to stay out. But it does add on to the ID. You are indeed correct. You might actually want to continue lower. And we're not respecting that liquidity. We're disrespecting that liquidity. So that is very true. Thank you, displacements. Thank you. Yeah, crude oil indeed tomorrow inventories. All right, nice rejection here on Nasdaq. Let's look at the 1 minute, see if we can get some nice 1 minute candle rejections just to tape reprice action a little bit. Beautiful rejection right there. And this is something you'll tend to notice as well when you start using 2 candle rejection a lot. Is on the same time frame, it will be a 1 candle rejection almost. On a time frame below it, it will be a 2 candle rejection. First candle does not reject, second candle does reject right here. The goal is to create a new value gap as soon as possible, ideally, and to then continue higher towards the highs right there as well. And this 4-hour value gap that we have right there. Would you consider this CS-based entry on GBP New Zealand dollar a high probability one? Currently on weekly context, daily with the potential of being a breakaway gap and having a 4-hour boundary to continue higher already, not waiting for the 4-hour rejection and look at the 1 hour for premature confirmation. My thought process on the entry was that the 1 hour CB was mitigated first, and that was the premium rate that sent price into the 4-hour busy, and price indeed respected it with a huge rejection. I was studying when having a huge rejection like that, if it is feasible to trim your stop loss at a reasonable area. I picked 50% of the long wick, coincidentally being below the already mitigated 4-hour busy. Let's see. Yeah, that's really good. That's really good. And to dive into that as well, let's see. And not created for value gap right there. Still a lot of bullish intention. Still a lot of bullish intention right there as well. Let's quickly go over GBP New Zealand dollar. Let's see. What do we have? 16 right there. It was on the 1 hour time frame right here. Let me see where this actually was. 2111. Was it right there? Oh yeah, it was. Okay, yeah, we have this 4-hour value gap right there, which we can potentially continue higher from. We have the 2 candle rejection already supporting the idea of potentially continuing higher of a 4-hour value gap. So we have a 4-hour value gap against the 1 hour value gap. But I do agree, if we want to continue lower right here, then we can continue lower off of this right there. So if we do want to continue lower right here, then this 1 hour value gap is a little bit tricky. But we do have, again, the entry was right there, I believe. Yeah, this is a good entry since the 4-hour value gap is overall stronger. Now, if you want to wait for more confirmation right here, then more confirmation can be in the form of a buy stop actually. So 2 candle rejection, if the 1 hour value gap wants to hold right now, first candle is not necessarily a rejection. We sweep the first candle high right there to continue lower. Perfect. Now, if we now want to continue higher above that high, then this in itself is also an entry to then look to continue higher. It's more confirmation variation, I would argue right there. But it's a good entry. We came into the hourly CB before the 4-hour busy on GBP New Zealand dollar. Aha, okay. Oh, then it's perfect. Wait, then the whole thing. Sorry, I misread that. Sorry. Then it's perfect. Yes, then it's perfect. Because then right there, We first have the 1 hour value gap, not following through with new 1 hour value gap, coming into the 4 hour value gap. Yeah, that's perfect. That's absolutely perfect. That is even better. Then this entry right here is already a lot better. A lot better. Since the 1 hour value gap is not following through, actually. That's perfect. That's actually perfect. Enjoy the rest of your day, MT. Trade green this week. I'm heading to the gym before work today. I'll watch the rerun. Perfect. Thank you for joining, Leo. Thank you, thank you, thank you. Let's see. What are we doing on NASDAQ? Okay. Okay. This is still intact, but usually what tends to be the case is when we do create price action like this, and keep in mind, right, we're trading towards a PD rate we potentially want to trade off of right there. This area right here is lower probability than actually trading off of it. So always keep that in mind as well, that the consolidation right here that we might be seeing is not that crazy. It's not that crazy. So crude oil. It'll be interesting to see what crude oil wants to do. And DAX right here. DAX also quite a big retracement right here. Quite a big, heavy retracement right there. Interesting. Yeah, exactly, Eddie. Exactly. Very good. All right. Personally, for flow right here, not necessarily interested, but GBP Australian dollar, etc. A lot of GBP pairs right there. That is still looking quite interesting as well to continue higher from. US dollar, Canadian dollar actually reached that first target as well. Very interesting. Very interesting. But for flow, I don't necessarily see a clear trade just yet. All right, perfect. Then I'm also going to end it here, team. And I'll see everyone at the next one. Thank you, everyone, for joining. Be careful, of course. Wait for the high probability price action. Crude oil will be very interesting as well. But that 4 hour value gap, keep that in mind right there. All right, perfect. Thank you, everyone. Thank you.